UBS strategists say that private credit default rates could surge 15% if AI triggers an aggressive disruption among corporate borrowers. That follows Blue Owl's new limits for retail investors in one of its private credit BDCs, and a report from Citrini Research that says AI could lead to a double-digit U.S. unemployment rate by 2025, and also discussed fears in private credit. Let's discuss with Bloomberg senior reporter Silas Brown. Silas, I got to say, it feels like we've hit a fever pitch of whether it's Boaz Weinstein, Jamie Dimon, one of the people from The Big Short fame, Danny Moses. It's like a who's who of warning about private credit right now.
Yeah, and as I sort of said earlier, I mean, if private credit was a species, it's been able to evolve without predators for most of its history, and now you're seeing kind of increasingly critical voices. I mean, a few years ago, it was quite hard to find a public, someone who would publicly be critical of private credit. Now, I don't think you need to walk too far to find someone who has some choice views about the industry. I mean, such is the nature of sentiment. I mean, I think with the UBS report and default rates, I mean, I think I'm always default rates are kind of funny in private credit because of the bilateral nature of most of the transactions. They can renegotiate terms, and so there's somewhat flexibility when it comes to default language. I think the interesting thing that I'm kind of paying attention to is, or will be paying attention to in the long term, is recovery rates. You know, whether or not private credit that often has more control in negotiations, given that they have bigger positions in the capital stack, whether or not their recovery rates can kind of match or outbeat the syndicated markets.
Hey, I wonder, I was reminded in the Citrini research piece at the end, in the comments by, I think, a guy named Peter, and that's all he gave in terms of his identity, that it doesn't really matter whether or not AI is going to eat the lunch of software as a service companies, but the perception is enough to be a problem for negotiating the price of those services and then the default rate as well, Silas. Have you had those conversations with investors?
Yeah, I think it's it's to do with does the dog wag the tail, or is it vice versa? And I mean, I think in this, I mean, look, we still see a relatively stable market. I mean, there's not a huge amount of stress yet, but I mean, I think that hasn't impacted sentiment too much, and I think people can see that with a kind of paradigmatic shift in technology in such a darling of a sector, that will surely have quite profound consequences on not only private credit, but by the way, also private equity. I think, look, the deals that we're tracking now, I think we're paying very close attention to whether or not there's margin pickups. I mean, I think you can see that in the broadly syndicated markets to a certain extent already. And I think the fair expectation is either 50 basis points, 100 basis points pick up on certain credits that will not be able to make a particularly strong case on their kind of like health in the mid to long term.